Hey guys, Bitcoin is ignoring the short seller sentiment even locally, breaking upward through the cup and handle pattern, and it seems to be aiming for new and higher peaks. The trading week is coming to an end, and Bitcoin is finishing this trading week with such a beautiful rise. Over the past few days, more and more traders have been promoting this sketch on the chart, which quite clearly reflects the cup and handle pattern. And if we measure the target of this movement, we get a target around $145,000. At the moment, Bitcoin is trading at $117,000, and despite the genuinely positive sentiment from breaking through the potential cup and handle pattern upwards, there are still a few nuances, at least local ones, that I cannot ignore in my analysis. And what arguments might there be in favor of a correction? Right now, I'm talking about a local correction. I'm not talking about a full trend reversal, because I'm definitely not a supporter of shorting an uptrend. In an uptrend, you need to open longs, but longs should be opened after a correction. The most profitable longs are opened exactly where the price has fallen to. The fear and greed index is at 72, which is not yet extreme overbought, but it's already in the upper zone, and that's a reason to analyze the nearest possible levels for a correction. Over the past 24 hours, we've seen significant growth in open interest, including on CME, which indicates that institutional participants are also in the market. Overall, we see that the changes are quite substantial. This entire growth was accompanied by volume. We didn't see an unjustified long movement. It was backed by institutional money, interest from retail traders, and accordingly volume. On the 7-day time frame, all funding is red, longs are paying short, and this is a signal of overbought conditions. And even if there's a scenario with a local correction to slightly unload this relentless growth, it's almost always accompanied by funding with a clear skew to one side. Yes, of course, short sellers were cleaned out well, we hit an all-time high and brought long-awaited joy to market participants. At the moment on the Bitcoin liquidation map, we see that after $122,000, since Bitcoin hasn't traded there yet, there is no liquidity that could currently be tracked and considered a target. Below, down to $103,000, if I switch to the 7-day time frame, there is a huge amount of long side liquidity. The most obvious cluster is around the $105,000 level. ETF inflows into Bitcoin yesterday amounted to $1.2 billion. For comparison, that's more than for the entire previous month. Now I'll move to the chart to show clearly where the price might correct to in order to consider a potential long position. In previous videos, I pointed out that a positive factor was that before this entire upward move was realized, the price filled this imbalance, and that's an important imbalance because it was restoring Bitcoin's price after the low of this trading range was taken out. I noted this as a factor for a sustainable major move, not as a local one, because the nature of the candles and the price behavior in that area clearly indicated it. But as we kept rising, we formed more and more imbalances, and as we know, historically price, both locally and long-term, always tends to fill them. From $101,000 to $104,500, then we had a so-called pocket of trend liquidity. The price worked this area well, and the rally continued with the formation of new imbalances. Eventually, the price hit $118,800 and formed several more imbalances. As we remember, up to $105,000, there is a huge amount of liquidity to be collected. And on this chart, I tried to objectively assess the trading situation from the start of this movement. And from the beginning of this move, we see the formation of trend liquidity. I'm not saying that it all must be fully worked out, but at least partially. This may be part of my trading plan and definitely is part of my trading plan. In such situations, I try not to enter on a breakout. I try to open a long position on a pullback. And in that case, I split my position into several parts following my risk management rule. If there is a non-stop impulse movement, the position on the pullback will be built in several stages. The first level for opening a long position is the area around $111,400 after the price fills at least the nearest imbalance. But here, this level will be the first part of the entry into the trade and the smallest volume. The second entry into the same trade will be in the area of $106,000, and the volume will already be larger than the volume at the first entry. I won't yet consider the scenario of filling these two imbalances because in the end it's better to open a long trade, and if the price falls, just close it at a loss, rather than not use the opportunities the market provides at all. And speaking of opportunities, congrats to everyone who traded Ethereum. In all previous videos, I said that this trading range, this sideways range, should be traded from one boundary to the other boundary because we saw a false breakout of the lower boundary of this local sideways range, a return into the range, a retest of the imbalances, and a move to the upper boundary. A clean 22% move on Ethereum, also mirrored with Bitcoin. One can expect a return to the previously formed trading range. The best strategy in the current market will be to take what can be taken and believe that this is the beginning of a long-term upward move. Right now, there's active discussion of the theory that this is the beginning of a new major bull market and that Bitcoin could rise to $280,000 as early as 2025. That's an interesting opinion, and of course it's what I would like to see. And this adds to the previously mentioned update on the dynamics of global liquidity and the price of Bitcoin. So far, everything is going according to plan. Positive correlation remains and Bitcoin is following global liquidity. In order for us to see more and more new price records, the correlation must remain. Bitcoin is still following global central bank money supply with about a 3-month lag since September 2023. If the correlation with M2 continues, then by the end of this year, we may well see Bitcoin at $170,000. In general, friends, more and more opportunities are appearing to open the most interesting and attractive trades because volatility has returned to the market. Don't forget to subscribe. See you in the next video.